Hello, hi, welcome back to Unicorn Investing. Right, so today I will be comparing two stocks, two e-commerce stocks. I'll be doing a quick analysis, a comparison of these two e-commerce giants. And at the end of it, I hope that you will be able to come to your own conclusion, which is a better buy. All right, whether it is whether C is a better buy or Melicado is a better buy. All right, so the ticker symbol is SE versus MELI. So let's dive right into it. So I'm sharing my screen right now, and we are looking at C Limited on Alpha. So I'm using Seeking Alpha for this research. And I do recommend, if you're looking for a good stock analysis tool, I would Seeking Alpha is one of my recommendations. And today I'll be using this tool for this stock analysis. So I wouldn't be going in depth. I wouldn't be going in-depth fundamental analysis of what both companies are doing right now. And I wouldn't be studying or analyzing what is driving the growth for these two companies. So if you would like to have more in-depth research, you can actually subscribe to Seeking Alpha and read up articles on these two different companies. And of course, other than Seeking Alpha, there are other platforms which you can do your stock analysis and research as well. All right. So, but today I'm basically going to compare the financial metrics for these two companies. So first and foremost, both C and Melicado, or in short MELI, ticker symbol MELI. These are some of the largest e-commerce companies by market cap. All right. Of course, Amazon is the undisputed market leader, followed by Alibaba, and on the third place, we have Meituan, but I wouldn't be going into Meituan because basically I'm kind of like avoiding China stocks for the time being. So we have C, which is a giant, e-commerce giant in Southeast Asia, but not only e-commerce, they are also a platform for games as well as fintech. Whereas Meli is an e-commerce giant, logistics, as well as also into fintech. But Meli is in their marketplace is in South America, and of course, but they are also into Central America, which is in US. So C is more into Southeast Asia, but they are already expanding into Europe as well. And once again, Meli is more on South America, as well as also moving into Central America. Right. So I think these are two pretty good companies for comparison. And in comparison, Meli is a much smaller company in terms of market cap, only about is still below 80 billion, whereas C is already close to 20 billion. So in terms of size, C is more than 2 times that of Meli. Okay, but let's look at some financial metrics to have a better understanding of which is a better investment at this point in time. Okay, so I would like to compare. So on this chart, we are looking at the price over sales ratio. because both companies are still pre-earnings, so I'm not yet looking into their earnings. So instead, I prefer, because these are both growth companies, so I prefer to compare their PS ratio. And if just by looking at the PS ratio, we can see that SEC is 2 times more expensive than Meli in terms of PS ratio. So you can see here, here is about, Meli is about value at 14 PS ratio, whereas C is 25. So C is 2 times more expensive. Okay, so let's move on and let's look at the total revenue. So the reason why I'm doing this is so that you can also, you can probably do similar research like this for other companies as well. So we can see that if we are measuring the total revenues, C grow, we can see that, okay, the orange color represents C. We can see that over these last 3 years, C actually grown faster. All right, so in terms of PS ratio, in terms of the PS ratio valuation, C is 2 times more expensive than Meli. So that is one up for Meli versus C. All right. But in terms of the speed of growth, in terms of the growth, the pace of growth for both companies, I think from here we can see that C is the winner. All right. But the thing is, you see, C is not a lot bigger than Meli, you know. C is not a lot bigger than Meli. It is only about, in terms of revenue, trailing 12 months revenue, it is only about 1 point something billion away from Meli, but the valuation is more than 2 times more expensive. So this is my question mark. So in terms of although C is growing at a faster rate than Meli, I feel that this growth, the 2 times more value in terms of valuation, I mean the 2 times more expensive valuation, I don't feel is very much justified. Because if you look at in terms of market cap, Meli is only about, in terms of annual value, only slightly, you know, about 1 point something billion lesser than C, but the valuation is so much higher, right, for C compared to Meli. Okay, let's move on. Then the next thing I would like to see is that we won't be looking at the net income, but I would rather like to look at the operating income, right? I like to compare the operating income for both companies. And the blue color is for Meli, and you can see that Meli is actually profitable. Okay, in terms of operating income, in terms of the EBIT income, it actually has more than 300 million of EBIT EBIT profits, whereas C is deep in the red. In fact, while the revenue growth has accelerated, but the losses are also accelerating. Yeah, we can see here losses are accelerating. So this is something very glaring to me. And so we have looked at PS, we have compared PS ratio, we have compared revenue growth, we have also compared operating income for these two companies. So which do you think is a more attractive company, a more attractive valuation, a more attractive growth story? Both are growing, all right? And both are also growing fast. But what I see is that I see that based on this trajectory, based on the operating income history of Meli, I feel that they have a better, they are actually a more productive business, they are growing and growing more steadily than C, right? So now, there is one story that I picked up, okay, for Shopee. You can go and Google Falcon Post, and basically you just Google Falcon Post Shopee France and Spain, and then I'm sure this article will come out. So basically, the gist of this story is that when C expanded in Southeast Asia, they are able to actually leverage on their gaming platform, which is Gary. Sorry, what is the company? They have a gaming platform. I can't remember, Gary something. What the heck? Okay, never mind. It just slipped out of my mind. But the problem is that when they expand to Europe, they don't have this gaming platform. All right. So and the Southeast Asia is a very different market from Europe. So this is most likely going to deepen Shopee's or rather deepen C's profits, and it was going to result in higher losses for C, right? So that's what I think may happen. And looking at how C has been expanding, because they spend a lot on advertising, right? So I find that while C is growing at a slightly faster pace than Meli, but C is getting, deeper and deeper into losses, while Meli is already starting to be profitable. And on top of that, C is trading at 2 times valuation of Meli. Okay, so finally, okay, and then there's one more thing that I want to show you, and that is the earnings history for Meli first. All right, so we can see here that in terms of earnings, Meli managed to have in the last 2 years, Meli managed to beat earnings analyst consensus earnings 2 times, missed 4 times, unfortunately. But you can see here the growth trajectory. The trajectory is that Meli is getting more and more profitable, and they are starting to beat analyst consensus, the earnings consensus, right? And you can see they have quite a massive beat here. They have the recent quarter. In the recent quarter, let me increase. In the recent quarter, Meli had a massive beat in earnings, right, of more than 600%. And in terms of, so you can see here, and in terms of revenue surprise, Meli has also been beating revenue consensus estimates. So you can see here, the blue color is the actual versus the black color in consensus. So you can see that Meli has been consistently beating revenue estimates. So these are all the revenue earnings beat surprises. So Meli is doing well. All right, so we can be sure Meli is doing well. But let's look at C. What about C then? All right. For C, in terms of the earnings surprise, they only beat earnings consensus 1 time, and they missed 7 times in the last 2 years. And I have no idea. In fact, I feel that you can see that they are improving their earnings performance, but it seems that they are going deeper into losses again. All right, can we see this deep losses are steepening again. So, and now that they are expanding into Europe, I expect them to lose more money in the coming quarters. Okay, then when we look at the revenues, in terms of revenue surprise is also quite inconsistent. But although we can see that generally, of course, as we have seen earlier, their revenues have been growing and growing very fast. But they are not beating every quarter consensus also. Let me see. Yeah, kind of, right. Well, they're doing well, no doubt about it. They're growing. They are growing their revenues at a fast pace, but also at a faster, they are losing money at a faster rate because they're spending a lot of advertising dollars to expand their e-commerce business. Okay, the last thing I want to show you is their charts, their price charts. For C, all right, they are very near the all-time highs. Okay, C has been going up, has been all the way up. In fact, for the last 2 years since the pandemic, and now we are just a little bit below all-time high. The all-time high, the historic all-time high is 372, and now we are about 347. So we are near all-time high. Now, given that Meli is, I think, is still a long way to be profitable. All right, so I would classify this as a rising star. I wouldn't consider this a solid growth stock, but I would consider this, I'll rate it as a rising star, and I like that it is making money for shareholders, but it is now very expensive in terms of valuation. And if I want to get into Meli, if I want to get into C, I would be more comfortable to get into it when it is below the moving average. This is the 25 days moving average. I'll be more comfortable if it is below the 25 days moving average. And you can see here that the stochastics is showing it's a bit oversold here, and yeah, so we are a little oversold technically also, and I'll see that I'll be more comfortable to get in if it is below the moving average or even below the trend line or below this trend channel. But overall, if I compare it with Meli, okay, let's bring up Meli. Meli just had a massive earnings beat just now. I showed you, and the valuation is much cheaper. And right now, in terms of the chart, it is 23% below its all-time high, right? In terms of the chart, yeah, it is also below its moving average, right? So, in conclusion, I feel a lot more comfortable to invest in Meli versus C. Both are great companies, both are growing at a fast rate. But Meli is the one that is starting to be profitable, and the price is 20% below its historic high. So I believe all it takes is the next quarter to beat analyst consensus, and it will send Meli back to its historic high and maybe even break all-time high. So given that the overall market right now is in a very bullish mood and stocks are all flying off the charts, I would feel a lot more comfortable putting my money on Meli than SE, right? So I hope you have gained some insights from this short stock analysis video, and I hope to see you again on the next video. Thank you.